In today's video, I'm going to show you a squeeze setup inside of UNH, which has more than a 72% win rate going back 30 years. It has seasonality on its side, with November being the strongest performing month out of the year and December being a close second. But there's still one big catch, and I'll show you what that catch is in today's video and how to account for it when building your trade setup, which we will do inside of UNH. Now, coming inside of our thinkorswim charts, before we start talking about the squeeze setup or any of that good stuff, let's zoom out and let's talk about this very clear 550 resistance area. I've drawn a horizontal line there, and we can see how we've tagged it multiple times in 2022, and each time it served as a key place of resistance. Now we're getting awfully close to that 550 area as price action's currently trading near 537.83. Now with price trading where it's currently at, we have a squeeze that's been building up, which we can see right down here. For all Volatility Box members, you can download the squeeze to follow along on our website. That's tosindicators.com/squeeze-course. This is included for free with your membership. And there you'll find the Triple Pro Squeeze, the Slingshot Squeeze, the Squeeze Signals, all of which we'll use in today's video, along with their back testers right down here. So you can download those to follow along and have all of the tools that I'm using. Now, inside of UNH, the squeeze setup that we currently have triggering today is the Slingshot Squeeze. If I load that on our charts here, you can see this yellow arrow, and the whole idea of the slingshot is that momentum has dipped below zero, and we're looking for that momentum to come right back up, and this time fire in the bullish direction. That's the premise of this. Now, if we load on our backtester to try and get some stats around how effective has this signal been in the past, let me load that on. And if we zoom out, we can see that over the past 5 years, we've had just 4 total trades here. 3 winners, 1 loser, the average winner 2.86%, the average loser, negative 0.35%. So that looks good, but we don't really have a lot of data points, a max of 4. So instead of just 5 years, let's load in the max available data. Now all of a sudden, we have a lot more data points. If I show you the report, you can see that this goes all the way back to August of 1990. That's our first trade that's being taken here. Now if I close this out and we look at just the stats, we can see we have 27 winners, 10 losers. This gives us a win rate of just around 72%. So a nice win rate as soon as we add more data. However, you can see the average winner and loser flip-flops here. The average loser is much greater at negative 7.32% compared to the average winner at 4%. And this is waiting for the squeeze to fire as your exit. The average trade duration here, 9 trading days. This tells us that the typical trade gives you some time to enter. It's not like this squeeze is firing right away, right after you see the signal. It does take some time typically. So knowing all of those facts, if we zoom in, we can start to get a little bit better idea of what we expect the squeeze to do. Now, currently, that 550 level from today's closing price is just around $12 away. It's not too far away. However, if you were to try and trade this, to me, the obvious place you would need to have your stop is below this 520 area. That risk to reward doesn't really make a lot of sense. Now here's where I think the uh-oh moment comes in, is if we load in our weekly time frame and we take a look at the squeeze here, this is to me what would be the quote-unquote red flag. It's the fact that the weekly squeeze has already fired, and in fact, the histogram bars, at least the way you might read this, is that you're starting to approach a place where you might see a little bit of momentum exhaustion, where it catches up just a tad. So in there, that 550 area to me seems like a decent place to take your first batch of targets, not really looking for too much when, say, the weekly squeeze is already fired. So coming back into our daily time frame chart, the way that I would think you would account for all of the information that we've talked about, and the last thing actually before we move forward is the seasonal tendencies. Let me show you that real quick. Is November right here. If we're going back to the max available data again here, November, we can see average performance 4.25% for the month. December, 3.78%. Both are fairly strong months. November is the strongest, And outside of that, we can see some other strong months, May, March, but November, December towards the tail end seem to be some of the months where you expect price action to get going. So if we could skew our risk to reward by having a slight little pullback here in price action, something like a double bottom, that would allow us to get much closer to the 520 area and have much more room for the upside. Now, if you're looking at this in terms of a trend pullback, the easiest way that I think you could do that is with the Market Pulse indicator. The Market Pulse is currently plotting right near 524, and that would still allow you to shrink your risk down to just around $4-ish or so, a little bit more with a buffer, but that allows you to target a lot more on the upside and make this trade worthwhile. Again, keep in mind where you're looking for the squeeze to fire, and that's typically your cue to exit. However, we are trying to be a little bit more prudent with this 550 area in mind. Alright, I hope you found this video helpful. For those of you looking for some squeeze setups, UNH looks like a decent setup here if we were to get a pullback. Without a pullback, that weekly squeeze to me is a big question mark that I think makes this setup not worthwhile considering the big 550 resistance we have up above and the squeeze already having fired on the weekly time frame. Alright, take care everyone. Good luck trading, and I'll see you in our next update.